On this video, I'm going to describe the different types of levels that we have when we are trading supply and demand imbalances. There are two kind of levels. One of them are valleys, and other are peaks or swing highs, swing lows, which are best traded at the extremes of the curve. It is all explained in another video. But here we will summarize all this. I will describe what a supply zone is, and this will be applicable to the demand zones. I won't do the demand zones because this will be just the images upside down, really. We have the first type of level that we have is the rally-based drop. As you can see here, if you watch the previous video about how to draw a level, you will understand that this is the first leg, this is the base, and this is the drop. So we have like a rally, base, and a drop forming a supply area. This is a distal line, this is the proximal line, this whole area in yellow is the base area, and the whole thing forms a supply. So what do we do when we find such levels? We have to sell when price pulls back to that basing area, the origin of the whole imbalance, of the whole drop, as you can see over here. This is one of the levels. This is the rally base drop. Rally base drop. For a demand area, we would have like this here, the drop base rally. Here, drop base rally. This is just the same thing. This would be the first type of level. This would be the inverted V or a peak, swing high. Okay. The second pattern would be the drop base drop, which we also call a continuation pattern, a CP, which is, as you can see here, this is a drop, extended range candle. We base for some time, for a couple of candles here, and then we drop again. And what do we have to do here? We have to sell when price retests for the first time that area. We have to sell when it pulls back to that basic area, the origin of the whole imbalance. It's just the same as this area of supply, this inverted U, sorry. It's the same thing. So CPs need at least one basing candle with the opposite color to the direction of the trade in order to be validated. One blue basing candle for shorts and one red basing candle for longs. And we need to avoid dodges, one single dodges or several dodges at the area. The continuation patterns normally are composed of smaller range candles or Marubosu candles. We don't want wiki areas there, wiki candles there. It is all explained in another video in the course, in the classroom, sorry. So the thing here is that we have these two levels, the inverted U levels, the valleys, and the continuation pattern, which is this. These are the two levels. It's the same thing for the demand levels. Same thing, but we have to do the opposite thing. So now we go to explain the difference between these levels and how they apply to deciding what we want to do when we are trading any forex pair or CFD or futures or whatever. We have two kind of levels, okay? But apart from this, we need to distinguish how fresh or how non-fresh a level is, because that will be crucial in order for us to decide if we want to trade it or not, if we want to trade that level or not. So there are two kind of levels. Both the valleys and peaks and the continuation patterns can be either original or fresh. An original level is a level which is not a reaction to a previous level, a level that has been created on a blank area, on a white area on the chart, out of the blue. It is not a reaction to a previous level. Thus, an original level can be fresh, that is untested, but a fresh level does not necessarily need to be original, because that level can be a reaction to another one. And a fresh level is a level which price has not retested yet, but it doesn't necessarily need to be original. So we will describe that on a price chart now. This is the use of the levels on the original levels. In trending markets, we will always use fresh levels, always. We don't need an original level in order to trade a trending market, a market which is in an uptrend. We just need the fresh demand levels. We don't need original levels. If their level is original, it's even better, but we don't need original levels. But if we want to do counter trend, we always lean on original levels, that is, levels that are not reaction to previous levels. We shouldn't lean on non-fresh or used up levels. Used up means that more than 3 retests if we want to trade counter trend. And remember that the first pullback to a supply and demand area is always the highest odds. So don't try to chase the levels that have been hit several times, because trading is, after all, a trading numbers game. The more retest a level has, the lower its probability. So let's focus on higher probabilities. It will be also simpler to execute, because if the level is not fresh, you are not trading it. That's it. So let's have a look at all these on a price chart and see. Let's remove all these objects and let's see where we start at. Okay. So let's start like here, for example. Here we have several levels over here. So what do? We start drawing the levels. So let's draw this level over here. We will draw a horizontal line at the lowest low of this area, of this valley, and then we will draw a horizontal line right at the top of the basing candle, which is it is all explained in another video. Okay, how to draw the levels in a consistent way. So that's the level. So what we do is we extend a rectangle over here, more or less. So the thing is, now let's talk about how fresh or how original this level is. This is a very mechanical way of doing it. So we are here. Okay, we have a drop, a base, and a rally. So is this level fresh or is it not fresh? Let me use a scale fix and make this like this. So if we want to know if a level is fresh, we have to look, if for a demand level, we have to look up and right, up and right. So we look up and right and we see that the level has been created, but it has not been retested. So this level is fresh, this is fresh, this is fresh, and this is fresh, and now it is not fresh anymore. This is the first pullback into the level. The level was fresh until the previous candle, but now it is not fresh anymore. So this defines how fresh or how non-fresh is a level. So this is fresh, this is not fresh. Okay, we look up and right. So we need to look up and right. As you can read here, I wrote it, I posted a video to write this. Look up and right to assess freshness of a demand level. And we should look down and right to assess freshness of a supply level. So let me draw a supply level so you can see this. We've got a supply level over here, right here. We've got a drop, a base, and a drop. So here we would draw the level like this. Horizontal line at the top. This is described in another video. The lowest low of the basing candles. Okay, and then we draw the level like this. So this is the level. Is this level fresh or not? This is a drop, a base, and a drop. So we look, okay, we look for a supply level, we look down and to the right, and we see that the level is fresh, has not been retested. So we continue like this, and then here the level is retested. when we reach this candle over here, the level is no longer fresh. But until there, the level is fresh. Okay, so for a supply level, we look down, down, and right, not left. Round and right. For a demand level, we look up and right, always right. The freshness of a level is assessed, is considered by looking always to the right, because the right is the future, and the future has not come yet. So how do we know? How could we know if a level is fresh or not if we don't know what's gonna come next? What's the future? So we need to look right. The right is the future on the chart. The left is the historical price of the chart. So now comes, we need to define. We need to go and define on a price chart, to show on the price chart how original a level is, because, well, now we know how to define fresh levels, but we need to define what an original level is on a price chart. An original level is a level which is not a reaction to a previous level, which is created out of the blue, which is not a reaction to anything else. So let's look at this. How do we know if this level is original or not? Because we know now that this level is fresh. Because we look right, we look up. But in order to know if this level is original or not, we need to do something different. We need to look for a supply area. We need to look up and left, because left is the historical price on that price chart. The right is the future. So original level is. So we look up and right and left. Sorry, up and left to know how original it is. So how do we do this in a mechanical way? So it's simple. We draw a horizontal line, or you don't need to do that, but in the beginning, yes, it's good to do this, because now it's very obvious. But in candles like this, you don't know if it is a reaction to a previous level. But now it is really obvious. We draw a horizontal line and we look up and we stop when we find the first candle. We don't cut through candles. We won't consider this area or this area of supply. No, this is not a reaction to this or to this. We look up, and when we find a red or green candle or blue candle or whatever it is, we stop here. And now we see, we ask ourselves this question: is this level a reaction to a previous level? Is there a level over here? No, there is not. So this level is original. That's how we define it. So we look up and left for original levels of supply. Up and left, we stop, and this level is original because it is not a reaction to a previous level. So at this moment here, this level was original and fresh. Now it is original and non-fresh, but it is still original because it is not a reaction to a previous level. You understand? So this is original and fresh. For demand, we have to look down and left in order to assess how original level of demand is. So this level we have here of demand, okay, is this level original or not? So we have to go back in time. This is always low. We draw a horizontal line at the bottom, and then we move here. That's it. We go back in time. Is this level a reaction to a previous level? Yes, it is. As you can see over here, this is the level. It is a reaction. It missed it by a couple of pips. It is, for me, that is a reaction. So this level is not original. This is a reaction to that level. For me, that is a reaction. Okay. So let's continue over here, down up here. So this level is original. So is this level original or not? So we draw the level, which is like this. We draw a horizontal line at the top. We go left and we stop when we see a candle. So here we have a level, which is a reaction to this level. Okay, because we'll look up and left. This is the level, 2 touches already. So this level, okay, could be original. We don't know yet. What we know is that this level of supply, what supply level is fresh or not. Now it is fresh, now it is not fresh. But is this level original? We don't know. We draw a horizontal line up there. And then we go back in time, and then we see if this level is a reaction to a previous level. And there we have. It is a reaction to this level, as you can see. So that level is not. That level is not. Let me draw the rack, the rectangle reader. It is extended like that. You see? So this level, it looked original, but it was not original because it was a reaction. We draw the horizontal line to the left, up and left, and we stop here at the first candle. We don't take into account this area. We can't cut through candles. So this is the most recent area. So now that we have this level, we have to assess how original that level is. If that level is original or not. Is this level original or not? So we draw a horizontal line, and we see that we stop here, and there is no level over here. The level is right there. So this level was original. It was original and fresh. Original because we look up and left, and it is not a reaction to an area. And this level is fresh because we look down and right to assess if this is original or not. So this level was original. This level is good for counter trend because it is original. It is also good for trading with a trend because if we are in a trend, as you can see here, look, trend is like that. So this is a trend. We can use this for trading with a trend because for the trend, for a trending market, we always use fresh levels. If it is original, it's even better. So this level is fresh and it's original, and we clearly have a downtrend on the 4-hour chart, as you can see. Probably also on the daily chart by looking at these candles. So if we are in a downtrend, we are allowed to trade only fresh levels like this. If this original, it's even better. This level is fresh and original. So let's continue higher. Okay, so let's see here. We've got another level over here. A nice drop. Right, like that. That's the level. So is this level original or not? We draw a horizontal line over there. Is it a reaction drop based on a drop? Over here, this little tiny level. Over here, like that. That's it. So this level was not original. It was fresh, but price never pulled back into that level. So we could have traded that level, that CP pattern, continuation pattern, because it was fresh. It was a valid pattern because it had absorbed this support or demand area. It was not a demand area really. It was a support. Well, this was the demand area really, because it didn't. It was not a valid demand area because it didn't take out any previous supply like this one. So now we go up and we've got another level over here, right there. Okay. Is this a reaction to a previous level? Almost a reaction to a previous level. So this level is original. It is also fresh. We look down and right and it's fresh. We look up and left and it is original by few pips. So we now have this level again. It missed that level by few pips. How many pips? 60. Yeah. So it missed it. So this level is fresh because it has not been retested. But if we look up and left, is this a reaction to a previous level? Is it a supply area? Yes, it is a supply area, and it is a reaction to this level, as you can see. So this level was not original. This level is fresh, but it is a reaction to this level, as you can see here. And now we got this at the top with this spinning top candle. We draw the level as per the rules, like that. And now, do we know if that level is original or not? Look back, this line, go back here, first candle. It is original because the level was up there. This is the whole level. Basing area, lowest close of the basing areas. So that level was original, as you can see. Didn't make it there by a few pips. Like that. And we continue like that over and over and over again. Highest high, it is not a reaction, so this one is original, and all with the same thing. So this area, this is the basing. How do we know if that level is original or not? We do a horizontal line up there, and then we look up and left, and look. It is a reaction to this area, so this is not original. This is fresh, has not been retested, but it is not original. So when we have fresh levels, and if we look now at the 4-hour chart, look here, we've got a downtrend. Right. So since we are in a downtrend here, as you can see in the 4-hour, we are in a clear downtrend. You see, this is a clear downtrend. We are removing previous demand areas and respecting all supply areas over and over and over. So when we are in a downtrend, we are allowed to sell all valid supply areas if they are fresh. If they are non-fresh, we are not allowed, only fresh levels. And if they are original, okay, it's even better. But it is not necessary, it is not compulsory, okay? It is not mandatory. We just need a fresh level that has not been retested. So in order to assess if this level is fresh, we look down and right. Okay, down and right, and it is fresh. Yes, it is fresh. So we can trade it. Oops. It should be down here. Yes. So we can trade it. So if it is not fresh, we can't trade it. So this level was fresh, yes or not? Yes, it was fresh, and this was the reaction. Okay, fresh level. This is a fresh level here. Let me see. We'll see. There. This level, as you can see, made a lower low over here, and then rallied. So this is the first reaction. We can't trade this level again because it is already tested. So this is not a tradable area. The tradable area would be this one. Okay. So now we have this area fresh, and it removed this area. So now it was almost retested. Okay, we've got another area over here. Now we've got this one, which is valid because it made a lower low, as you can see. So we extended. Now this is a test. This is the entry. This one is the entry, not this one. This one worked as well, but we would not be allowed to trade this one at this second retest. The rules do not allow it because at the time the level was already touched. It was tested. So this is not the entry. This is the entry. We are in a downtrend, so we can trade fresh levels. This is not any level. This is trying to react for the third time at this level. So this is not a level. Long wick, no levels. And now here, what we got. This is the level again. Making lower lows. This is a continuation pattern. Drop, base, drop. And this is a trade, as you can see. Now we've got another level over here. Right there. But this level was valid when we removed this area. This is not an entry, okay? This is not an entry because it didn't do anything. Okay? It didn't remove any demand area. The demand area was here. The support was here. This was not any demand because it didn't take out any supply. So this was the entry. Now we've got over here another level, but that level is too much trading in the area, but it worked. See? This is a drop base for a day and then a rally, but this could be tradable because this area was a daily area. How do I know it is a daily supply area? Because look at so many candles. It's a whole day daily candle, maybe 3 daily candles. So this is a continuation pattern, probably on the daily. Let's look at it. Let me disconnect this, and then let's go to the daily, and let's see if this is a continuation pattern. Yes, it is. Look, drop, base, and a drop. This is daily. So This is the entry. So we continue. So we would be allowed, even if it's too much trading in the area, it has taken out the daily area, okay, it has broken down this area, and then the first retest, this is a trade. And as you can see, it is still respecting the downtrend. So here we have another level. This is another continuation pattern. Okay? We extend it. And then we've got another level over here. We extend it. This one was not a loss. Few pips, it's okay. Depends in the market. This level is taken out. Okay, this level is taken out. So now it is showing weakness on the euro dollar because all this time price has been dropping all the way down and respecting all supply levels. This is the first time that a supply level is taken out. So now the trend is broken, as you can see. But we will continue with this in the next video because I'm extended too much. We were just talking about how to assess how original or how fresh the levels are, and I think that's pretty clear. So in order to summarize, like I said before, we need, in order to assess how fresh a level is, we just need to look, this is a level, look down and right, and if it is not retested, it's fresh. In order to see if this supply area is original, we just draw a horizontal line at the top, we look left and then up and see if this is a reaction to a previous level. It is not, so this level is original. Opposite for demand areas. Hope that is clear. I will talk about the trail lines on another video, and I will talk about this example exactly, and you will see what I mean. Thanks a lot.